Hello, good afternoon and welcome to Mutual Fund Corner on CNBC-TV18. I'm Vinnii Motiwala and thank you so much as always for tuning in. Now, what interesting trends that we're seeing in the recent time. Women investors are making waves in the mutual fund space. As of March 2024, they hold 33% of the total individual investor AUM, more than doubling in their investments in the last 5 years. From around 4.59 lakh crores in 2019, in 2024, it jumped up to 11.25 lakh crores. SIPs have played a big role in the growth, with the total SIP AUM surging over 319% in the same period. Now, interestingly, T30 cities, that's the smaller cities as well, still dominate with nearly 75% of women's AUM. The share of women investors in B30 cities has started rising as well, growing from 20% in 2019 to over 25% in 2024. This shift aligns with the larger trend that we are seeing. Women's workforce participation has doubled to 41.7% in 2024. Not only that, and what is a growth driver for this is also the literacy rates are rising faster than men's. So financial literacy, that is improving, as well as overall literacy. Now, with financial awareness and economic empowerment on the rise, women are taking charge of their investments like never before. And to talk about this trend, all these data points we had coming in from AMFI's recent data. So to talk about all these trends, we do have two experts joining with us. Shibani Sircar Kurian, who's the head equity research and fund manager at Kotak Mahindra AMC, as well as Priti Rathi Gupta, founder of LXME, joining in with us. Good afternoon, ladies. Thank you so much for joining in with us. This is a show just before we do have Women's Day coming in over the weekend. But you know, isn't it so great to see women investors seeing such an increase in terms of financial literacy? Individual investors are increasing, the growth in AUM as well. You know, Priti, let me start with you. What is driving the surge of women's participation in mutual funds? What are the key factors that you are seeing, especially, you know, with LXME being part of it? How do you see this moving?
Thank you, Vinnii, for having me on this show. And I think it's great always to talk about women and investing. That's what we really cherish doing. So LXME, as you know, is a platform just dedicated to making women savvy investors, getting them, you know, into the investment arena. I think and the reason we've actually set up this platform is because we noticed the entire socio-economic trend fundamentally shifting. Right. And then, like you pointed out, I think financial literacy, digital access, as well as I think the shifting mindsets that we see in the, in both. And you've just mentioned not just the T30, but even, you know, cities going lower in the B30, we see a huge mind shift change. Right. Now, I'll just look at all of these slightly differently, but the numbers by itself will tell you. For example, the number of working women, right, has rapidly increased over the last 5 years. We saw a huge dip 3 years back where the working women ratio had gone from 22% to almost 17%. But now we are back to almost close to 40% levels, right, which is a huge shift in the way women have access to money in their hands. So that's the first shift. If you look at, for example, more working women, more disposable income, and therefore the ability to invest more. Stark trends like the number of single women rapidly rising, that is owed to the fact that we have, and I think that number is broadly 75 million, which is, just to put it in perspective, it's the entire population of Britain and Germany put together, right? Absolutely. That's the number of single women. And this could be due to just the rising age to getting married or divorced, or just women outliving men, because on an average, women outlive men. That all of that has actually literally sort of signaled and pushed them towards taking charge of their money, taking access of that, taking that decision-making, giving them the decision-making power to invest their money. And then, of course, I think financial literacy, for example, the amount of financial literacy that we do. And one of the important things here we need to remember is financial literacy, which is tailored to the way women behave towards money, has been very critical. We've seen that as a very successful way of creating awareness for women. And of course, the access to digital, financial services. And I've run a financial services firm for the last 30 years. The
Right.
biggest friction point was access to women. How do you reach to women in a viable way? And I think having a digital platform which enables that access by creating the right tools for women to actually come on board has actually also perpetuated this entire, I would call it a revolution, where women are actually taking to financialization
True.
of their savings.
Absolutely, a revolution that is coming in where women are now looking more in terms of the financial side as well. Shibani, good afternoon. And, if you would like to add anything to that, as well as tell me about the habits that you have seen changed over the years as well. Are investors, women investors specifically, becoming more risk aware, or are they inclined towards, specific type of funds? Anything on that front as well?
Yeah, hi and good afternoon. Wonderful to be on this show. So as we were clearly discussing that with financial literacy and awareness, a lot of women are clearly taking their step towards financial freedom. And the understanding is that savings is not enough and you need to invest in terms of creating long-term wealth. Now, in terms of investment habits, of course, habits are not general and they are often very personalized and is an outcome of individual behavior, whether it be men and women. But there are certain anecdotal evidences or certain anecdotal, outcomes that we tend to observe. Now, women by nature over a period of time have seen to be taking a more balanced approach to various aspects of life, and possibly the same holds true for investments as well. The other factor that we have been noticing is that one, of course, is financial freedom and women wanting to invest for their own long-term wealth creation. But now women also want to participate in terms of investments where their entire family is concerned and therefore take a more keen interest in what maybe her husband or the father is also doing from an investment perspective. So that's something that is possibly happening and driving more participation of women as far as investments go. The other factor is that one, typically women investors tend to, and again, maybe I'm generalizing to some extent, demonstrate patience and discipline, and therefore they help or they look at investments not more on a day-to-day basis, and therefore they are able to cut out some of the noise that is news-driven, and therefore look at long-term investments. So that's possibly another factor where their approach to investing possibly differs from where men are concerned. And finally, I think the SIP route has been a great tool for women to start their journey towards financial freedom and long-term investing. And therefore, what we've also seen is that women participation where SIPs are concerned have gone up considerably. And therefore, that has also been a medium for them to start their journey into mutual fund investing.
Absolutely. SIP surely is a great route for anyone, whether women investors or even if you're young. I think that really helps, because even a small amount and making that investment when you're in a college days or just as a woman who's a homemaker, I think it really supports in terms of the compounding that you have over the long period of time. And Shibani, you were highlighting also that, long term, that's the perspective most women look at as well. So that is why, that is something that is improving the participation, I believe, at least in terms of the industry and mutual fund industry specifically. Priti, coming to you, any specific trends, right? While equities obviously is one of the part of it, but in terms of allocation, specific fund types, any terms on that front that you have where women are also participating more on the debt side as well?
So, Vinnii, I think I say this all the time, and I'm just adding on to what Shibani just said, very beautifully outlaid the behavior and habits of women. But I think one of the key key behavior that we've seen, and, I've always been told while growing up that women are risk averse, right? I mean, the entire financial services industry says this, that women are risk averse. What we have found is that women are very risk aware. Which actually makes them great investors. Like Warren Buffett said, invest like a woman, right? I think the ability to actually, once they have awareness and literacy, they actually are able to make absolutely the right choices, do asset allocated investments. And like you rightly said, I mean, for example, if that was true, that women are risk averse, we wouldn't see that big shift where, we've said where the portion of equity, the percentage of equity in existing women portfolios has seen almost a 20% uptick over the last few years, because they understand asset classes. I think debt has always been a go-to for women because that is their sort of safety or the first step towards investing. So, for example, we've seen a great shifting from traditional debt instruments, which could be a fixed deposits into debt mutual funds, right? And we've seen that's the first easy step a first time investor does, right? So I think understanding that, and of course, gold, we cannot leave that out, but even that shift of shifting from investing in physical gold or digital gold to actually moving towards gold mutual fund, that's also a huge change that we are already seeing in behavior. So I think in all of this, the underlying is literacy, the awareness of saying, okay, I can use a particular asset or a particular product to actually now invest or grow my money.
Absolutely. Okay, ladies, just hold on to your thoughts because we're going to take a very short break, but we'll be back after the break and discuss more on this and what you all should be looking at. More tips coming in from both Priti as well as Shibani, so don't go anywhere, viewers. Welcome back to Mutual Fund Corner on CNBC-TV18. We still have with us our expert, Shibani Sircar Kurian, as well as Priti, Rathi, Gupta, who are here to solve all those doubts, as well as tell you what you should be doing as a woman when you're investing. Priti, women as such juggle multiple financial responsibilities. How can they prioritize investments alongside savings and expenses that they have? You know, what is it that you follow? What is it that you advise people?
You rightly said, one of the biggest challenges when it came to women taking that first step towards investing or really looking at investments actively was time, right? There's multiple responsibilities. So how can you have a solution that is time efficient for you, right? And is also very simplified in terms of the time it takes you to follow that process. So we've actually laid it out very, in very simple steps on the Lakshmi platform. And one of the things that we say is, the first thing that you need to do, which women do actually very well, is really pay yourself first, which is save. So how can you put aside maybe 20% or whatever you earn into an SIP kind of a process where it's automated investing into mutual funds. So you don't have to necessarily take that decision every month, sit back, decide a fund or choose or take a call. Once you've done an overall asset allocation, you sort of set that up for 20% of your income. Simple, the next bit is do an asset allocation, which is essentially follow a thumb rule, decide what works for you, and then just balance that all throughout. That's the only active sort of work that you need to do, which can be reviewed once in 3 months, right? And then one of the things that we always say is that beginning is most important. I think women shy away from taking that first step. So begin, even if it is today, you can begin your mutual fund investments with as little as 100 rupees. And we've seen that women form trust very differently, right? And at every first 100 rupees, they've built that trust of saying, okay, now I can sort of go larger, go bigger. So I think between really automating, budgeting, automating your savings into SIPs, doing an active asset allocation, and obviously educating yourself from time to time, keeping up. And I've always seen that once you put your money in, we've seen that women will then follow up with education because they are already invested. They will read up, they will seek knowledge. So I think between these three things, very simply done, it should not take you more than probably half an hour a month to once review your investments.
Absolutely. So 50% kind of essentials, then lifestyle comes in at around 30% and 20% of savings and investments. That's the highlights that are coming in from Priti. But Shibani, SIP, you mentioned about that before because it's a great tool for investing, disciplined investing that comes in. Could you suggest some things in terms of SIP is the only way, or if you do have cash, can someone go in for lump sum at that point of time to build wealth?
Yeah, absolutely. So first and foremost, obviously SIPs are the most efficient way to build long-term wealth because it brings about discipline in terms of your approach to investing. And also remember, SIPs make rupee cost averaging, and because of rupee cost averaging, the market timing becomes irrelevant. So typically what we keep telling everyone is time in the market is far more important than trying to time the market, and SIPs help you do that in a beautiful manner. Also remember that there are different types of SIP strategies. You can do a simple SIP, you can do a growing SIP, for instance. As your income grows, you can possibly look at increasing your SIP allocation. And then there are smart SIPs as well. So there are different SIP strategies that are available in order to create wealth over a long period of time. Now, coming to lump sum investing, obviously from a lump sum investing perspective, what we typically suggest is that you look at a multi-asset allocation fund or look at fund where asset allocation is in the hands of the fund manager who decides between various asset classes, whether it be debt, equity, gold, and commodities. And therefore, the timing in terms of which asset class to be in at a particular point in time, depending upon market conditions and valuations, are left to the fund manager. So that becomes a preferred route when you're looking at lump sum investing. Of course, for lump sum investing, you need to do a lot of research as well if you want to do it at your own end. And hence, we say that in that case, also take help of your financial advisor who will try to understand your risk profile, your goals, the timing of those goals, and therefore help create a basket of funds which will help you align with your long-term strategies.
Okay, surely that's interesting. But, overall you spoke a bit about asset allocation as well. Priti, what I want to know, is there some different way that one should go depending on their career trajectory, financial goals or life stages that they are single, married, motherhood, retirement? Different allocation set that one should watch out for as a woman?
Absolutely. So I think one of the sort of key guidance that we give women is that you need to look at asset allocation very personalized to yourself. And which is why you should probably make that call of how much to put in equity, how much to put in debt, and how much to put in gold, based on what stage of life you are, what are your responsibilities, what are your life goals, etc. Right? For example, we actually start with a thumb rule because it just makes it very easy, which is your 100 minus your age. However, that is a thumb rule. You need to overlay on top of that. For example, if you're 40 years old, and according to this thumb rule, you need to put 60% into equities and the rest of the 40% between debt and gold. What we say is now overlay that with what is the responsibilities you have, what would be your near-term goals. If you have young children, you need to save for their education. So actually look at your long-term, your short-term, and your immediate goals to fine-tune that thumb rule according to your own situation and circumstances. I think this does is it makes it very easy for women to know how much money they need to put into every asset class, and all they have to do is this is really just balance, right? For example, today the markets where they are, it's very easy for a woman now to understand, especially for as a good investor, that she needs to balance her equity. If it has gone down from 50% to 45, then she needs to actually invest more into equity. It's actually a great way of also being what they say a right investor should be doing, which is buying cheap and selling when it's expensive, right?
Absolutely.
So asset allocation actually also builds in the right behavior during market volatility. So for us, I think it's always the fundamental rule that we teach women, we handhold them, and we actually guide them towards is asset allocation is actually the most important decision investor makes.
And, any specific fund categories that you would suggest as well, in terms of equity, debt, hybrid, thematic, gold? That's interesting always.
Yes. So I think we've always suggested, I mean, depending, of course, we give out based on where the markets are, what they're looking at, a category of equity funds. For example, we would right now, recommend staying in large cap or large cap, mid cap funds. We would look at, in the debt, again, we'd look at what are their goals. For example, if she's looking at just an emergency fund, which we strongly recommend every woman to have, then we would recommend a mix of maybe a liquid fund and an arbitrage fund so that she gets sort of the best returns. If she's looking at slightly long-term, 2-3 years, then we would look at, different sort of debt funds for her that need. And we do recommend gold mutual funds more than any other thematic funds per se. So actually keeping it very simple and very easy, and also keeping the number of funds in her portfolio limited to about 5 to 8 funds, because what we don't want to also do is for every woman to have 20, 25 funds in her portfolio. Her ability to monitor that and to, sort of look at shifting if she needs to gets more and more difficult and time consuming. Well, that's how we look at advising women.
Absolutely. And Shibani, a quick one, how would you allocate the assets between equity, debt, as well as gold for a woman investor right now? What would be the percent if you had to give?
Yeah, so what we are really advising, not just women, but everyone pretty much at this point in time, given market conditions, is that equity should be neutral in your overall asset allocation strategy. Also use market corrections to build in terms of your equity portfolio. Gold should form some part of your asset allocation, which we believe is something that most women would do naturally as well. So gold should be some part of your asset allocation. However, given market valuations and the way valuations are today, what we believe is that large caps today are trading at multiples which are favorable, and risk reward is favorable, especially when you look at long-term multiples. And therefore, your portfolio tilt should be slightly overweight on large caps and slightly underweight on mid and small caps at this point in time.
Okay, thank you so much, Shibani, as well as Priti, for joining in with us on Mutual Fund Corner as always. And with that, it's a wrap on this edition of Mutual Fund Corner. Thank you so much for tuning in. Up next, closing bell.